Hey there, folks. Coming at you with this week's market wrap, the free version. What an absolutely crazy, insane week. Shippers, low floaters, garbage stocks were absolutely in fuego. So, look, Thanksgiving week, coming up into Thanksgiving week, typically we get some pretty wild action in some low floaters, garbage name stocks, because a lot of the pros are gone. We don't have as much volume in the markets because a lot of the pros aren't even around. Um, Start their vacations a little bit early, but we do get on occasion during Thanksgiving week we get some crazy runners. Now, it could set up for some nice day trading opportunities. Really important that you don't chase anything and make sure that there is sufficient liquidity. Make sure that it's not popping up. Some low floater isn't popping up because somebody bought 1,000 shares, right? You want to make sure you've got some real volume so that you can get in and out quickly, buddy. Really, buddy. Okay, sorry about that. Had to go get the door. Buddy was kind enough to let me know. All right, so anyway, what was I saying before I got so really interrupted by Buddy? I think we were talking about low float names. Make sure there's liquidity. Could be an interesting week. Don't chase anything. Make sure you've got liquidity to be able to get in and out quickly. All right. So Facebook, the reason why Facebook is up here is they just announced a $6 billion buyback of their shares. Facebook not looking too good, right? Just broke below the 200-day simple moving average and trying to get back above it. So, they announced this buyback. Company buybacks, I don't really get all that excited about them. When I see insiders buying significant amounts with their own money, that gets my attention. Company buybacks typically do not, only because they really aren't bound to have to do it, and it can be over a specific period of time. It doesn't have to happen right away. So, it's nice to see that they're going to buy back some shares, but it necessarily doesn't have to really move the stock. So I was just talking to the pro members in the live market wrap about where this would really get attractive. Facebook for a long-term hold position potentially really is for me would be around $100, $102, 102.50, somewhere in that area. What I'm looking at is the fact that it's trading between these two areas of long-term support and resistance, right? This channel, and that's where it would become interesting to me. Is down here, is comes back down and tests this trend line down here for potential support. So, and it's a nice round number, right around $100. That's pretty interesting. So worth keeping an eye on. All right, let's go take a look at the action in the markets. And what I've been telling the pro traders all week long is that bulls are in control, right? And here we are towards the end of the year. We've got the potential Santa Claus rally season coming up. The bigger issue is that you have a lot of hedge funds which have really were positioned wrong for the outcome of this election and how the market would react. So you have a lot of funds and money managers that are underperforming the market and really are almost forced to chase stocks into the end of the year to try and save their year, right? So it's my feeling that we're consolidating a bit here in some of these indexes and some of these sectors. We've got gaps on a lot of these that need to be filled, and they probably will fill eventually. Like I tell the pro members, just because those gaps are on the daily doesn't mean they have to fill right away. They can fill over time, right? So maybe what we do is we consolidate a little bit. Maybe we get some consolidation action next week. Continue to work our way into the Bollinger Band for some of these sectors, some of these indexes. build a little bit of a base, and then we get the rally into the end of the year where, you know, we get potentially a rate increase, and we get more clarity on the new presidential, you know, the new president and his staff and where things might be headed. And then maybe we get that pullback, right? We get a significant pullback and start filling some of those gaps that have been formed on the daily. So I really do feel as though the Bulls are still very much in control. I posted an article today that was on Benzinga into the chat room about the IWM and the fact that a lot of traders passing around the desks that you know, this run in the IWM and the Russell 2000 is a short covering fueled run, and that may be true, but reality is we just closed at a record high, and when you start closing at record highs, that attracts more attention, and to me it indicates that this move likely isn't over. So we're going to take a look at that here in a second. Let's go to the daily. So, you know, we pulled up in the NASDAQ, we pulled up to this area of potential price resistance, found some resistance there after a really nice, healthy run. It would not be a shocker if we were to consolidate here, drift lower, even maybe test the top of this little short-term trend line, test the 8 EMA, and then see if that holds a support. We get a nice little bounce. Let's take a look at the IWM. Actually, let's, you know what, we're going to just go right in a row here. Hold on a second. Let's take a look at Dust. Right? Dust is working its way back into the Bollinger Band. Now listen, J Dust could, you know, once it starts working its way back into the Bollinger Band, could rip higher if gold continues to drop, right? And the miners. So we've been talking to, you know, all week long, been telling the members over at Alpha Wolf Trading that gold was putting in a bear flag. And yes, it did pierce this lower Bollinger Band. It could have had a potential snapback play, but it didn't. What it did was it just kind of worked its way back into the Bollinger Band. Nice bear flag formation, and then today we broke down a little bit, and really I think where it could get really ugly is if we break below 114.80 with some conviction. Then maybe we get that waterfall effect, and people really start to pile out of gold. The big issue for gold is the strength of the dollar, and it's something I keep telling the members to pay very close attention to. GDX, GDXJ, you know, bear flag does not look good. Worked their way back into the Bollinger Band, and now looking as though maybe going to come down and test these lows down here, right? Below the 200-day moving average. Just not looking good at all for this space. And if the dollar continues to strengthen, that is likely going to get worse, right? JNUG and Nugget, I mean, now they're getting down into these areas where they could potentially announce a reverse split. That's something to keep in mind. Once they get down to, you know, a certain price level, they do a reverse split. So that could be coming up for JNUG and Nugget, but not looking good. Now, if the dollar by chance happens to, you know, pull back, and we're going to take a look at the dollar right now, but you know, that is a pretty much a little bear flag formation there. But let's take a look at the dollar. So piercing the upper Bollinger Band, right? And it has been grinding higher. Now, one of the things I talk to the pro members about is, yes, we are making new highs with the dollar, but it's not as though we're doing it on tremendous conviction. And why do I say that? Well, I say that because the volume is declining. It's not as though we're making these highs and the volume is increasing, right? It's actually declining. So we're kind of grinding our way higher. We do have this gap to fill on the daily. If we were to get a swift pullback in the dollar, that would likely give us a pretty sharp snapback in gold and in the miners. So that's something I think you really want to pay close attention to, is the strength of the dollar. Okay, Let's take a look at another sector that has been very impressive. We'll just and that's financials, right? So this is the bear, three-time bear ETF for financials, and here is the three-time bull. We do have gaps on the daily that eventually probably will fill, but we pierced that upper Bollinger Band right up into price resistance, 36 bucks, right? And now we are working our way back into the Bollinger Band and consolidating. So still looks pretty darn bullish for financials. Let's take a look at the transportation sector. Same thing. We do have gaps to fill on the daily. However, we got out of the upper Bollinger Band. We have been consolidating sideways, and today we actually popped a little bit over this short-term trend line to looks like all-time highs. 159. Well, not all-time highs, but all recent highs. Okay, 159, and we're back within the Bollinger Band. Airlines typically do pretty good into the holiday season. People traveling all over to go see family and friends for the holidays. So could continue to see some strength in transportation. Plus you got shipping, right? Air freight, all that stuff should benefit if it's a good shopping holiday season. So that sector looks pretty good. Let's take a look at the IBB. It's consolidating in between these two areas. These two areas, right? This basically making a nice little pennant, hanging out on top of the 8 EMA. Consolidating, does have this gap to fill on the daily. Got another one down here, little tiny gap that could be filled. At some point, maybe those do fill, likely will, but for now, consolidating, healthy action. And we'll see if this holds up next week. I think next week we may see which way this is going to break, whether it's down or up, but still looking fairly decent. IWM. Now, so if we break up in the IBB, the stocks that could really get going are some of those little low floater biotechs, because that's what's in play right now. It's all that low floater stuff, right? And IWM making all-time highs. It pierced the upper Bollinger Band, worked its way in. We do have gaps to fill on the daily, and those likely will fill at some point. But right now, just worked our way back into the upper Bollinger Band, consolidating and hitting all-time highs, grinding our way higher. And when things like this start making those kind of moves, it attracts attention. So, you could have even more moves higher. I don't think this is going to reverse in the near future. I think right now, anyway, things look pretty darn good, and like we could continue to move higher. Let's take a look at Labu. If the IBB does wind up breaking to the upside, Labu is kind of flagging out a little bit here, right on top of the 8 EMA. Could have a trading opportunity there. If the IBB starts getting some love. Let's talk about oil. So oil, the strong dollar, not necessarily good thing for oil. We just got a rig count today that was big rig count ad. 19 rigs added. That was a big ad. And I don't want to look at oil. I want to look at USO. Where are you? The dollar will likely put pressure on oil if it continues to climb. But next week we have a potential catalyst. We've got OPEC, I believe, next week, big meeting. Depending on what is said leading up to that meeting and then what is said at the end of the meeting, we'll see. That could potentially be a catalyst to take us higher, or we could wind up breaking lower, fill this gap, or maybe even come down and test somewhere in the $9 area, right? We'll see what happens next week with oil, but I do think that is something that likely will get some action heading up into the OPEC meeting. Of course, we have no volatility, UVXY, TVIX. There's nothing there. There's no fear. A lot of complacency. Unless the market turns around and sells off hard, you're probably not going to see any of that, any volatility. So, what do we got the VIX at? VIX is almost at 12, so it's getting pretty low. All right, let's take a look at. Oh, before I go there, I happen to bypass the SMH, which is flirting. Actually, I think is all-time highs. Right, closed over 70. It is piercing the upper Bollinger Band. It is up 4 days in a row. Wouldn't be surprised if we were to consolidate here, pull back a little bit, build a base before we try to make the next move higher. But still, SMH is looking pretty darn good. You know, it's getting away from this longer term trend line. It's getting away from the 200-day moving average. It really spiked away from it over here, but if you look at what it's been doing for the last few months, it's really kind of been consolidating sideways, allowing that 200-day to catch up a little bit. It's been working off the overbought conditions through time. So we'll see what happens if we consolidate here and then, you know, take out 70 with real conviction, but SMH still looks pretty darn good. S&P 500 had a nice run right up into this 219 price resistance, pulled back a little bit today. You know, would be healthy for us to consolidate in this area for a little while, hold above the 8 EMA, and then take out 2188, 2189 with some conviction and get another move higher. But still, it looks pretty darn good for S&P 500. All right, so let's take a look at some individual sectors. We'll take a look at XAR, aerospace and defense. We do have gaps to fill on the daily, but this 63, boy, has been acting as support pretty darn good for the last 1, 2, 3, 4 days. Almost like that is the line in the sand. 63 happens to coincide basically, or pretty close to the 8 EMA, working its way back into the Bollinger Band after the big move higher, but still looking pretty darn good for aerospace and defense. But look, strong dollar, if the dollar continues to rip, at some point will start to impact some of these big multinational companies, aerospace, defense, the tech companies, the industrials. But for right now, still looking pretty darn good. All right, home builders coming up into a resistance of this trend line here, just crossed back over the 200-day moving average. Just had a nice new home starts report the other day. Had a nice little run in home builders. Retook the 200-day moving average. We'll see if we just consolidate here. Maybe pull back a tad. We are coming up into the holiday season. Not typically a great time for selling homes, but we'll see. 30. You've got price resistance at 34, and then you've got that little trend line there that could also act as resistance. So I wouldn't be surprised if we just kind of consolidated in this area. XLB, nice little pennant here. Materials sector coiling up. I think next week we're going to see which way this one breaks. But is still managing to hold up on top of that 8 EMA. XLE with oil pulling back a little bit. Really the big area for XLE is 72 bucks. We take out 72 with conviction. I think you get a nice little run, nice little pop up to $74 area before you run into some potential price resistance. Financials, we already talked about them. Consolidating, looking pretty darn strong. Do have gaps to fill, but still looking really, really bullish. Industrials, look how tight this is. I mean, CAT pulled back a little bit today. the strong dollar will impact these big industrial companies, but that still looks pretty darn tight right there. And maybe we find out which way this breaks. It could break back down and fill these gaps that are on the daily. Got one here, got another one here, right? Got these gaps to fill, but it still looks pretty darn bullish. I mean, it's just working its way back into the Bollinger Band. Now it's tightening up a little bit. We'll see which way it breaks. Probably next week. Utilities, bear flag, not looking good at all on utilities. Bounced up to the 8 EMA and then pulled back, but not a good look on utilities. XLV, so this one, a lot of talk all week long from all kinds of different people. Healthcare, 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 beaten up, good sector to get involved in. And I believe that to be true. However, I wasn't too crazy about this action in the XLV today. Let's take a look at BMY, which has got a really nice look on it on a daily. It does have this gap to fill down here, but pretty tight look on BMY there, working its way back into the Bollinger Band just below the 100 EMA. Big gap to fill to the upside on the daily. It's got a gap down here to fill, but then it's got this massive gap to fill up here. So like BMY, but this XLV pulling back to that 21 EMA, maybe it comes down here and fills this gap around 68, 88, 68, 80. Maybe it comes down and fills that gap and then we get a bounce, but XLV not looking all that fantastic. We'll see what it does next week. Consumer discretionary, talking to the pro members all week long about this $80 well, actually, I've been talking to them for the last several weeks about this $80 area of resistance. Came up there, tested it, and then pulled back. Came up, tried to test it again, pulled back. And this time we came up, we tested it, and wound up breaking through. So consumer discretionary actually looking pretty good. What we want to see now is that if it pulls back to this $80 area and it holds as support, right? It took a little while to break up through it. Let's see if then we can hold the support, drift down a little bit, test that area, and then maybe we get a bounce back up and test this 82 area, which is what acted as support and resistance for quite a while, nearly, 3 months back here. So let's see if we can go back up and test that area once again. XME, metals and mining, so not so much gold and silver, but copper and coal and those kinds of companies do have a gap to fill on the daily, just working its way back in, hanging above the 8 EMA, but still looking fairly good, right? And that's all because of potentially a big infrastructure build out, right? So then you would assume that material companies would do better in that type of environment. We'll see if that comes to pass, but still looking pretty darn good for XME. Oil and gas and exploration looking pretty darn, looking good. This is gonna be tied to oil, right? So we'll see what happens with OPEC. We'll see what happens with oil next week. And retail broke back above 44.50, got out of the upper Bollinger Band, working its way back in. Retail actually looks pretty darn good too. So, and we're coming up into retail season. So, all in all, what's my take? My take is I'm still, bulls are in control. I think they likely could be in control through the end of the year, because I think there's going to be a lot of people chasing performance, and even though things are probably overvalued, overbought, I think bulls maintain control and likely will into the end of the year. And then after the Fed raises the rate and we see what the new administration looks like, well, then we'll cross that bridge when we come to it. But next week, be careful. Don't chase any of these low floaters. Don't chase anything. Look for an intraday setup. Make sure you have liquidity. Liquidity. You know, if some stock is popping because somebody bought 1,000 shares of it, you know, and it typically trades 35,000 shares in a day, you know, that's not something you want to go chasing into, right? You don't want to chase anything, but that is really something you don't want to chase into. So you got to make sure there's some liquidity there. But it could be an interesting week for day traders. Could be fun. We'll see what happens next week. I will be doing stocks to watch on Sunday. I do not have a UFC fight. I do not have a party, so I am good to go for Sunday morning, 8 a.m. on Ticker TV with stocks to watch. And 8 o'clock Vegas time. If you want to join me, come on down. And if not, that's cool. I will send the recording out on the blog and over Twitter. And that's it. That's all I got. I hope you all had a fantastic week. I hope nobody got hurt too badly in the crazy run of the shippers. And that's it. That's it. Have a fantastic weekend. Have fun. Be safe. And I'll see you all. I'll see some of you on Sunday, and I'll see the rest of you next week.